Silver crashes 22% while mints shut down. The breakdown nobody's talking about. This is Saturday, February 14th, 2026, the last trading day of the month, the last day of the week. And silver just crashed from $121 to $95. $26 gone in a matter of hours. Gold crashed from $5,600 to $4,950. $650 wiped off. If you're watching this and you're panicking right now, I need you to stop, take a breath, and watch this entire video. Because what I am about to show you does not make any sense. The numbers do not add up. The story the market is telling you is not the real story. Silver crashed 22% this week, one of the biggest weekly crashes in years. And yet right now, at this very moment, you cannot buy physical silver. The Perth Mint in Australia has suspended sales. The US Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has purchase limits. Let me say that again so it sinks in. The price is crashing, but you cannot buy the product. Does that make sense to you? Does that sound like a real market? The fundamental contradiction. In any normal market, when price crashes, supply increases. Sellers come out. Product becomes available. That is how markets work. But that is not what is happening here. Here, the price is crashing while supply is vanishing. The price is going down while the whole world is running out. Something is very wrong. And by the end of this video, you will understand exactly what it is. Welcome to the hidden economy. If you are new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now because this is the kind of analysis you will not find anywhere else. And if you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see it. I predicted the crash. Now let me tell you why today's crash is not what it seems. A few days ago, I made a video. In that video, I told you that $117 was a crucial zone for silver. I explained why a crash was likely coming. I showed you a 30-year historical pattern. At that time, everyone was bullish. Now, here we are. Silver crashed from $121 to $95. But here is what I did not expect. I did not expect that while silver was crashing, the physical market would completely break down. I did not expect mints around the world to suspend sales. I did not expect a complete disconnect between paper and physical. And that is what we need to talk about. Let me show you what is actually happening behind the scenes. And pay attention because understanding this could save you from making a massive mistake. The two silver markets. First, let me explain how the silver market works. Because most people do not understand this, and that misunderstanding is costing them money. There are two silver markets, not one, two. And these two markets are telling completely different stories right now. The paper market. This is COMEX. This is where futures contracts, derivatives, and digital silver trade. This is where hedge funds, banks, and institutions trade billions of dollars worth of silver every day. But here's what you need to understand. They are not trading real silver. They are trading paper promises. Contracts that say someone will deliver silver at some point in the future. Most of these contracts never result in actual delivery. They are just bets, casino chips, financial instruments with no physical metal behind them. The paper market is like a giant poker game. Billions of dollars change hands, but at the end of the day, most players never actually see or touch any silver. The physical market. This is where actual silver trades. Real metal, coins you can hold, bars you can stack, the stuff that exists in the real world. Now, here's the critical point. These two markets are supposed to be connected. The paper price is supposed to reflect what physical silver is actually worth in the real world. But right now, at this very moment, they are completely disconnected. The link is broken. The paper market says silver is $95. The physical market says you cannot have any at any price. One of these is lying to you. Which one do you believe? The computer screen or the empty shelves? The Perth Mint evidence. Let me show you the evidence. Perth Mint, Australia. One of the largest and most respected mints in the world. They have been producing gold and silver bullion for over a century. Governments trust them. Institutions trust them. Retail investors trust them. On Thursday morning, before the crash even happened, when silver was still trading near $117, they sent a notice to their wholesale distributors. I have seen this notice. Here is what it says. Due to the increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 1-ounce silver bullion coin. As a result of this, we have decided to pause taking wholesale orders for this coin from today until 23rd February to clear the back orders. Read that again. Let every word sink in. Increasing worldwide demand. Not decreasing, increasing. Large backlog of orders, not surplus inventory, backlog. Pause taking orders, not discount sale, pause. Until February 23rd, that is almost a full month of no new wholesale orders. This was sent when silver was still at $117, before the crash, when everything looked fine on the surface. They are also implementing monthly allocations to ensure all regions receive stock. Monthly allocations, that is rationing language. That is what you do when you do not have enough product to meet demand. This is not a company having a bad day. This is not a temporary website glitch. This is the Australian Government Mint, one of the most reputable in the world, telling the global market that they cannot keep up with demand for physical silver. Australia is one of the largest silver-producing nations, and their own mint cannot get enough silver. Let that sink in. Then the crash happened. And then the crash happened. Silver dropped from $117 to $95, a $22 discount in a matter of days. Now think about this logically. Use your common sense. If the Perth Mint was already at breaking point when silver was at $117, what do you think happened when silver crashed to $95? Every smart investor in the world just saw a 22% discount on an asset that mints cannot even keep in stock. What do you think they did? They bought. They bought everything they could find. The crash did not reduce demand. It created a tsunami of new demand. The U.S. Mint breakdown. Now let me show you the United States Mint. The U.S. Mint has suspended all sales of silver numismatic products. Their website shows products as temporarily unavailable. When you call their customer service line, they tell you they're updating prices. But here is what actually happened. Silver prices moved so fast that the Mint could not keep up. They were selling silver eagles at $91 when the spot price went above $90. They were losing money on every sale. So they stopped. They suspended everything. And when products came back online, the price had jumped from $91 to $169, an 86% price increase overnight. The 2026 American Silver Eagle that was supposed to release in January has been delayed to late February. Subscriptions are already sold out. This is the official government mint of the United States of America, telling you they cannot sell you silver at the old prices and do not have enough inventory at the new prices. The India crisis. But it gets worse. India, one of the largest silver markets in the world. And right now, dealers are not just running low on inventory, they are defaulting on deliveries. That means they are taking orders, accepting payment, and then failing to deliver the product. People are paying for silver and not receiving it. The headlines coming out of India are shocking. Not even a sliver of silver available. Amazon India sellers are defaulting on silver deliveries. People are posting screenshots of their orders being canceled after payment was already accepted. This is not a supply issue anymore. This is a breakdown of the physical delivery system. The Royal Mint. And it gets even worse. The Royal Mint, Britain, the official mint of the United Kingdom, one of the oldest mints in the world. They have been producing coins for over 1,000 years, out of stock on silver bars. Even 1 kilogram bars, the basic, most common format, gone. When major sovereign mints across multiple continents, Perth, US, Royal, are all experiencing the same issues at the same time, that is not coincidence. That is not bad luck. That is a systemic crisis. Costco is rationing silver. And if you think that is bad, wait until you hear what Costco is doing. Yes, Costco, the wholesale retailer, the place where you buy toilet paper and rotisserie chicken. They sell silver bullion, and they have implemented purchase limits. You cannot just buy as much as you want anymore. They are limiting transaction sizes. Costco is rationing silver. Let that sink in. A retail store known for selling things in bulk is now limiting how much silver you can buy. Why would they do that? Because demand is overwhelming supply. They have to ration what they have. The Shanghai vault drain. But here is where it gets truly alarming. Let me show you what is happening in China, and this is the part that should genuinely scare you. I have the Shanghai Futures Exchange data from today, January 30th. Fresh data, real numbers. The SHFE silver vaults currently hold 455 metric tons of silver. That is 14.6 million ounces. Sounds like a lot, right? It is not. And here's the part that made my jaw drop. In one single day, 26.94 metric tons were removed from the vaults. Almost 27 tons in one day. One single trading day. I need you to understand how insane that number is. 27 tons is approximately 870,000 ounces removed in 24 hours from one exchange. At this drain rate, the Shanghai vaults could be completely empty in less than 3 weeks. For context, annual global silver demand is over 1 billion ounces. The Shanghai vaults now hold just 14.6 million ounces. That is barely 1% of annual demand. That is nothing. That is a rounding error. And nobody in mainstream financial media is talking about this. Nobody. China's strategic hoarding. Now here's what makes this truly frightening. China has already restricted silver exports. They have classified silver as a strategic national security asset. They are treating silver the same way they treat rare earth minerals, the same way they treat materials for weapons and AI infrastructure. So think about what China is doing. They are restricting exports, no silver leaves China, and they are draining their own exchange vaults, taking physical delivery, moving metal from public warehouses to private storage. What does that tell you? It tells you that China knows something we do not. They know what is coming. They are hoarding physical silver while the paper market crashes. They are preparing for something. While Americans are selling paper contracts and crashing the price, China is taking physical delivery of every ounce they can get their hands on. One side is selling paper, the other side is hoarding metal. Which side do you think knows what silver is really worth? Who is doing the selling? Now let me tell you who is doing the selling. This is perhaps the most important part of this entire video. Pay very close attention to what I'm about to tell you. Nearly all of the selling this week in silver has occurred during U.S. market hours. Not Asian hours when Shanghai and Hong Kong trade. Not European hours when London is active. U.S. market hours. When New York wakes up and COMEX opens. When New York opens, silver dumps, red candles, aggressive selling, price collapses. When New York closes, silver stabilizes. Sometimes it even rises during Asian hours. Then New York opens again and the selling resumes. This pattern has repeated every single day this week. It is not random. It is coordinated. The Great Disconnect. The U.S. sells and dumps digital derivatives and paper promises. The rest of the world buys and accumulates physical metal. Stop for a second. I need you to really think about what I just said. American banks are selling something they do not have. They're creating digital silver out of nothing, pressing buttons, moving numbers on screens. Meanwhile, people in Asia and the Middle East are loading physical bars onto trucks. They are taking delivery. They are draining vaults. They are removing real metal from the system. One side is playing a video game. The other side is taking home the prize. American banks and institutions are flooding the paper market with sell orders, driving the price down. They are selling contracts for silver they do not have. They're creating supply out of thin air with a few keystrokes. Meanwhile, Asian buyers in China, Japan, and India are buying real physical metal. Middle Eastern buyers in Dubai and the UAE are buying real physical metal. They are taking delivery. They are draining vaults. They are removing silver from the system. The paper price goes down. The physical metal disappears. The lease rate signal. Let me show you the lease rates. Lease rates are what it costs to borrow physical silver. In normal markets, lease rates are near zero, around 0.3% to 0.5%. Right now, silver lease rates have exploded. Some reports show 8%. Others show rates as high as 39%. 39% to borrow silver. That is a panic signal. That means physical silver is so scarce that holders are demanding massive premiums just to temporarily lend it out. When lease rates spike like this, it means the physical market is broken. It means there is not enough real metal to go around. The paper pricing mechanism is breaking. Now let me connect all of this together for you. What we are witnessing is a complete breakdown of the paper-silver pricing mechanism. For decades, the price of silver has been set by paper trading. Banks trade hundreds of millions of ounces of paper silver every day. The actual physical market is tiny by comparison. This has allowed the paper price to be manipulated, suppressed, controlled. But now something has changed. Physical demand has overwhelmed the system. Mints cannot keep up. Vaults are being drained. Dealers are defaulting. Lease rates are exploding. The paper market says $95. The physical market says there is no silver available at any price. Eventually, one of these has to give. Either the paper price rises to reflect physical reality, or the physical market completely breaks down. I believe we are approaching that breaking point. What this means for you. Now let me tell you what this means for you. Because understanding the situation is useless if you do not know how to act on it. And I'm going to be very direct here, no sugarcoating. If you are holding physical silver, do not panic. I repeat, do not panic. Do not let the paper price scare you into selling your metal. Look at the facts. Mints are suspending sales. Dealers are defaulting. China is hoarding. Vaults are draining. Lease rates are exploding. And you are sitting there holding the one thing the entire world is scrambling to get. The paper price is noise. It is manipulation. Your physical metal is worth what someone will actually pay for it in the real world. Right now, that is way more than $95. Hold your metal. Do not be fooled. If you are holding paper silver, ETFs, futures contracts, ask yourself one question. If everyone demanded physical delivery tomorrow, could your counterparty actually deliver? The answer is probably no. There's not enough metal. You do not own silver. You own a promise. and promises break. If you are looking to buy, good luck. Physical premiums are exploding. Japan is paying 60% over spot. Dubai is paying 40% over spot. The paper price says $95. The real world price is $120, $130 higher. If you can find physical silver at reasonable premiums, consider yourself lucky. That inventory will not last. The paradox. And here's the paradox that will blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand. More demand drains supply faster. The crash is making the shortage worse, not better. The 5-year deficit. Let me show you the bigger picture, because what is happening today did not start today. This has been building for years. Silver has been in a deficit for 5 consecutive years. 5 years. Since 2021, demand has exceeded supply every single year. Let me break that down. Every year, the world mines approximately 835 million ounces of silver. That is total global mine production. But every year, the world consumes over 1 billion ounces of silver. Industrial demand, solar panels, electronics, EVs, medical demand, investment demand, coins, bars, ETFs, jewelry, and silverware demand. Total demand exceeds total mine supply by hundreds of millions of ounces every year. The cumulative deficit over these 5 years is over 800 million ounces. 800 million ounces where demand has exceeded supply. Where the deficit comes from. Where does that extra silver come from? It comes from above-ground stockpiles, vaults, reserves, recycling, inventory that was built up over previous decades. Think of it like a bathtub. New mine supply is the water coming in from the faucet. Demand is the water draining out. For 5 years, more water has been draining out than coming in. The bathtub is emptying. Those stockpiles are now running dangerously low. The buffer is almost gone. The Shanghai vaults are at critically low levels. COMEX registered silver has been declining for years. London vaults have seen significant drawdowns as metal flows to India and Asia. The cushion is gone. The buffer is depleted. There is no more slack in the system. There is no emergency reserve to tap into when demand spikes. And now, with mints suspending sales and dealers defaulting, we are seeing the consequences of years of deficits finally catching up to reality. This is not a short-term issue that will resolve itself next week. This is a structural problem that has been building for 5 years, and it is accelerating. What happens next? Now let me tell you what I think happens next. I believe we are entering a new phase of this bull market, a phase where paper and physical completely diverge. The paper price may continue to be volatile. It may crash. It may spike. It will be manipulated and controlled as long as the paper market exists. But physical silver will become increasingly scarce. Premiums will rise. Availability will decline. Eventually, you simply will not be able to buy physical silver at the paper price. This is already happening. Physical premiums in some regions have exploded. Japan is seeing 60% premiums. Dubai is seeing 40% premiums. The paper price says $95. But if you want actual metal, you might pay $120, $130 higher. This is the disconnect, and it is only going to get wider. The 1980 precedent. Now I want to give you some historical perspective, because what is happening now has happened before. In 1979 and 1980, during the last great silver squeeze, similar dynamics played out. Paper and physical disconnected, dealers ran out of inventory, premiums exploded. People could not find silver to buy even as the price was moving. The paper market said one price. The physical market said something completely different. Eventually, the paper price had to catch up to physical reality. It had no choice. When there is no physical metal to deliver against paper contracts, the paper price becomes meaningless. Silver went from $6 to $50 in a matter of months, an 800% increase, one of the greatest commodity moves in history. Will history repeat? I'm not saying we will see that exact scenario repeat. Markets are different now. The players are different. The rules are different. There are circuit breakers and position limits that did not exist back then, but the fundamental dynamic is the same. When physical supply cannot meet physical demand, price must eventually adjust upward. The paper market can manipulate prices. It can suppress them. It can create artificial crashes like we saw this week, but it cannot create physical silver. It cannot mine silver. It cannot manufacture silver out of thin air. Paper manipulation can delay the price adjustment. It cannot prevent it forever. At some point, physical reality wins. It always does. The question is not if, the question is when. And based on what I am seeing, with mints shutting down and vaults draining and lease rates exploding, I believe we are getting very close to that moment. 3 types of people. Now, there are 3 types of people watching this video right now. The first type is scared. They see the crash and they panic. They want to sell. They want to get out. They do not understand what is happening, and fear makes them reactive. The second type is confused. They see conflicting signals, price crashing but mints closing. They do not know what to believe. They are paralyzed. The third type understands. They see the paper crash for what it is. They see the physical shortage for what it is. They recognize this as an opportunity, not a crisis. They're using this moment to accumulate while others panic. Which type are you? The final evidence. Let me leave you with this. The paper price of silver crashed 22% this week. During that same week, the Perth Mint suspended sales. The US Mint suspended sales. The Royal Mint ran out of stock. Indian dealers defaulted. China drained 27 tons in a single day. Lease rates hit 39%. The price went down. The physical metal disappeared. One of these things is a lie, and it is not the empty vaults. This is what manipulation looks like. This is what a disconnect between paper and physical looks like. This is what happens when a system built on paper promises confronts physical reality. They crash the paper price. The whole world is running out of metal, and you get to decide which side of that equation you want to be on. I will continue to bring you updates as this situation develops. Subscribe if you have not already. Hit the notification bell so you do not miss what comes next. Drop a comment telling me if you think paper or physical will win this battle. I read every single comment. Remember what I said at the beginning. The price is crashing, but you cannot buy the product. That is not a market. That is a magic trick. And now you know how the trick works.